Good morning, Steve Frieda with the Morning Grain Comments. Mixed trade overnight with nearby beans up. We've got meal lower, oil higher, corn and wheat lower. I think overnight market had rallied on the USDA numbers that came out with corn 90% planted. The trade was looking for maybe a little bit more than that, but it's still ahead of 80 average. Beans 75% planted versus the 54 average. The winter wheat crop was lowered 1 percentage point to 47% good to excellent from 48, mostly down in Oklahoma and the Pacific Northwest, while soft wheat conditions remain above average. Spring wheat was rated 45% good to excellent versus 80 last year, and that was a little bit lower than the market had anticipated. As far as weather is concerned, U.S. Midwest, 2 to 3 weeks of good favorable weather across the Midwest with temperatures maybe normal to above and precip near normal. It was interesting that our weather guy yesterday put out a special report talking about cooling temperatures in the Pacific, and the cooler the temperatures are, the higher chance of some ridging in the U.S. in summer of 2021. Right now the ridging would probably stay in the western third of the country, but any increase in cool temperatures could move that ridge out into the plains. And the colder it gets, the more chances there is that the ridge could develop in the western corn belt. We also noted that in Brazil, soybean premiums are lower. China's bought maybe last week 7 to 17 soybean cargoes. They need to buy a total of 40 per week to reach the 100 million ton import number that people are talking about. The other thing is that in Argentina, there's concern about the strikes going on with dock workers wanting to be vaccinated, low Paraná river levels, reducing loadings of vessels, and also talk about a nationwide lockdown because of the coronavirus. In China, soybean margins continue to decline, which may be causing some reduced soybean numbers, but we do expect them to start the U.S. program later this summer. Corn market basis levels domestically continue to be strong. Farmer is done selling for a while. We continue to see ethanol's coverage to be pretty good, but I think the exporters are bidding up for corn to load the boats. In the wheat, I think that European values are lower. There was a total of 1 million tons offered to Egypt in their tender, and most of the prices in Europe and Black Sea were $20 to $25 a ton cheaper than U.S. hard red winter wheat. Still uncertain about Russia wheat prices, how much they're going to export. Their prices continue to be above, especially Eastern Europe and Baltic prices. Outside markets, we did have a Morgan Stanley CEO talk about increase in interest rates here in the U.S. early in 2022. We'll see how that impacts all the inflation talk. Right now, lower interest rates is helping the stock market. Dollar's a little bit lower, and crude has also turned a little bit lower. So in general, choppy trade. We're looking for continued resistance because of the U.S. weather, and nearby corn demand remains strong in support of the futures. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, treat people like you yourself would like to be treated.